Okay, hello everyone. Thank you for joining us for today's webinar on Chinese EV and future mobility market. I'm Olivia Higgins and I'm the presenter at Futu Singapore, the moomoo trading app. Now, while we're waiting for still a few more people to come in, a little bit about today's webinar. This is a joint webinar organized by Nikko Asset Management Asia and Futu Singapore, the moomoo trading app. And now we are also, before you go and stay tuned till the end of the webinar, we're having a brand new BYD E6 electric car giveaway on our live draw happening 17th of January at 3 p.m. So head on in-app while you're waiting and be one of the first to subscribe to this ETF to win. So about today, we're about to delve deep into an electrifying market, Chinese electric vehicles and future mobility, EVFM. But before we begin properly, a little housekeeping rules. You have any questions? Make sure that you type it in the Zoom chat box or in the moomoo app, and ideally who you like to direct it to, and we'll open it up for a Q&A at the end for both speakers. Now, ultimately, a disclaimer, we want to help you through these webinars to improve your financial literacies. So use these webinars as an educational platform. We hope you're just as excited as we are because the EV topic is hot. And our trading platform, moomoo, offers Singapore investors early access to this first SGX listed ETF that captures opportunities in fast-growing Chinese future mobility markets. So I think this is a great time to enter and see what you have in store for you so that you can build your portfolio in this. Now, the initial offering period, the IOP, is from 3rd to the 13th of January 2022, and investors of moomoo can now be among the first to get early access to what is the first SGX listed ETF and help to grow in this amazing space of Chinese EVFM market. Now, a little background about the EVFM, it is actually one of the fastest growing technology sectors in China and right now in the world. So we are excited for this webinar to discuss these two main angles. One, why should you invest in the Chinese electric vehicles and future mobility market? And two, how to be among the first to get early access to this ETF via the moomoo app. And towards the end, we will show you an in-app training demo with our second speaker for today. We've got a list of 2 experts on our panel from NikkoAM and Futu Singapore to help you make better investment decisions in the EVFM market. Now, let me start with our first speaker of today, Mr. Kelvin Neo. Now, Kelvin is the ETF Business Development Director at Nikko Asset Management Asia Limited, and he is also responsible for driving the growth of Nikko Asset Management's ETF's business in Southeast Asia, and also helps to promote the firm's ETFs in Singapore and across the region. Hi, Kelvin.
Hey, hi, Olivia. Thank you very much for inviting me tonight.
Thank you so much for being one of the experts on our panel today. And so we're excited to discuss further on how, why it's such a hot market to be in, and also to help our listeners and viewers out there on making better investment decisions. The floor is yours, Kelvin.
Sure. Thank you very much. And perhaps if you allow me to share my screen, I will like to begin this with a presentation. Sure. All right, and thank you very much for passing the mic over back to me. And so today, for the next 15 minutes or so, I will be talking a little bit about the new ETF that Nikko Asset Management will be listing on the Singapore Stock Exchange on the 20th of January. The ETF name is, as what you see here, the NikkoAM-StraitsTrading MSCI China Electric Vehicles and Future Mobility ETF. A very long name, but going forward, we'll just call it the EVFM ETF. Very quickly on the specifications of the ETF, I think it's just important for you to know what you're buying into, the product. And you would see here the name of the ETF, China EVFM ETF, the benchmark, which is the index. For all that you're not aware, an ETF needs to track an underlying index. Most ETFs out there are passive today. The index is the MSCI China All Shares IMI Future Mobility Top 50 Index. Some other key information that you should take note of, primarily for investors, is the single share class and its currency, which is in Sing dollar. So there's only one share class for this ETF, but it does trade on the Singapore Exchange in two different currencies. The primary currency is Sing dollar with a ticker EVS, and the secondary currency is US dollar with a ticker which is EVD. And for those who are cost conscious, the total expense ratio is 70 basis points per annum, and that's capped, of which 50 basis points is the management fee that Nikko earns. So ETFs are a pretty low cost vehicle for investors. But moving on to the next slide, I'm just trying to click through here. I just want to kind of mention, sorry for that, I think we just missed out the page. Yes, the future mobility, the future of mobility. I wanted to start with this slide to give everyone a sense of the underlying investment exposure that you are really investing into. When you buy into this ETF, it's not just about EVs, it's not just about cars, it's about the whole concept of future mobility. And we try to capture 5 main themes here, stretching from battery, smart mobility, sharing economy, high-speed transport, and vehicle automation, which again, leads into many different value chains, very deep and very wide, from battery technologies to car sharing to autonomous vehicles and even hydrogen cars. And the good thing is that this is the exposure that you will be gaining into when you buy into the ETF. We'll run very quickly into some of the key reasons why the China EVFM sector is interesting, exciting. And really, there are 4 reasons why you should take a closer look at this space. Number 1 is really on policy tailwinds. There's very strong government support to promote and grow this industry. We'll touch a little bit on it later on. Number 2, demand. The Chinese consumer market is very adaptable and receptive to EV markets, and this is critical. Without the sales or the consumer acceptance, this market cannot grow, like all new technologies. Number 3 is really the mega production capacity of China. You do need very broad-based and deep supply chains in order for the industry to grow, and China just is in that sweet spot. And like I mentioned earlier on, this ETF is not just about cars, not even just about smart cars. It's about the future of mobility, all the different trends and themes that you can gain exposure to over the long term. I have to qualify over the long term, mid to long term, and that's also where the future growth opportunity lie when you buy into the ETF. So just very quickly touching on some key points, just only key points of those 4 main trends I talked about. First is on government policy. I just want to start by saying that the EVFM market is very real. It's very real in China, it's very real globally in the US and as well as the Europe, where every major country wants to have a pie, again, be part of the pie of this growing pie. It's very real in Singapore as well. And here you see the image of electric bus. You would have seen that running around in Singapore for a while already, and Singapore wants to be part of this as well. Here is a picture of IKEA Tampines. And for those of you who are not aware, Singapore does have a plan to be plugged into this growing industry. We are setting up charging points all over the country. The LTA has plans to set up about 60,000 over the next few years. And I think starting from this year, they will also roll out tax incentives for you to buy an electric car. So here is a white one charging at Tampines. So very real in Singapore. Looking a little bit more about the government policies in China, there are 2 major government policies which investors should take note of when you're investing into this space. And they're very important. The first one is the State Council Blueprint that was released back in November 2020. Then they advocated for the development of new energy vehicle sector. which runs from 2021 to 2035, and the aim was for EVs to be 20% of new car sales by 2025, which is from today another 4 years, right? So that kind of set the direction for the whole industry. The second policy is the 14th five-year plan running from 2021 to 2025 as well, and that highlighted that new energy vehicles will become one of the strategic emerging industries for China. Right. In this pie chart here, what you see is that by 2025, in another 4 years' time, China will be pretty significant, producing 1 in every 2 EVs and selling them, globally. I see. Sorry for that. The clicking seems to be a bit delayed, so that my slides do run around a little bit. So moving on to the second point, which is really on the consumer market. How is it looking? You would see here a chart showing the number of electric vehicle sales in China since 2016. And this comprises of both battery EVs as well as plug-in hybrids, which runs on both the ICE engine as well as batteries. And what is quite observable here is that the sales have started to really pick up significantly since the start of 2020. You can see that on the right-hand side of the chart, growing at about close to 100%. I think in last year, the number of sales in terms of units was close to 3 million. That was the target for the industry, right? Now, despite the very strong sales that you are seeing in China today for EVs, I think a really, really important point is that the penetration of EVs within the Chinese car market is really still quite low. Penetration rate here is still about 5 to 10% of the entire fleet of cars, passenger cars in China. There are about 300 million cars in China today, passenger cars. And for those of you who are not aware, China is as big a market as the US is, right? Which means that it is a very important market and a very significant one as well. So the projections are that the penetration will continue to increase over the next decade or so. And that's a very, very powerful driver for car companies, EV manufacturers in China, as well as entire value chains and supply chains and component makers, etc. So this is really the growth of an entire industry and sector. Some interesting snippets that I want to share will be some of the better selling cars. What's happening in the domestic consumer market today? These are the kind of cars that you see here that sells really well. Tiny, dirt cheap EVs that cost around $7,000. Top speed is just about 100 kilometers per hour. I don't know how well they will survive here in Singapore, but it works very well in China, and it works very well for young people, selected groups of consumers, mainly using them for urban driving trips rather than long road trips. As you're aware, if you're in China and you want to take the long haul, you probably take a high-speed rail. Another very, very well-selling car EV in China is the Wuling Hongguan Mini EV. This one costs only $5,000 US. Now $5,000 US, maybe just 110 or 120 of the car's price in Singapore, and it's the top selling EV model for 2021, selling even better than the Tesla Model 3. So China does have a unique domestic market. And the good thing about all the companies, that 50 companies that is included in the index, which our ETF tracks, is that many of these are component and manufacturer makers that feeds into the EV market. So they all get to benefit. Number 3, China's mega production capacity. For those of you who are not familiar or not aware, China produces about 1/3 of the global value in manufacturing. So China is a manufacturing power. And not just that, not just are they big, over the past 10 years, under the China policy of, I think the new the new China manufacturing policy of 2025, there is a constant, they have been over the decade trying to upgrade their industries to be more value adding. And that capability building really benefits the EVFM market. A snapshot of China's supply side leadership, a very busy slide, but kind of just focus on those little orange bubbles that you see on the slide. China is a leader, not just in terms of the number of EVs cars that they are selling, not just in terms of numbers, which we know is roughly about 1 in every 2 that's being sold. They are also a leader in battery production, which is what you see at the bottom of the slide. right? You can see, maybe I'll just try to annotate a little bit so that everyone follows here. China is also a leader in battery production. You can see that I think just in 2019 alone, they manufactured more than a million batteries. And they really are a leading battery producer globally. In terms of battery technology, China is in a unique position, because while the batteries that they are using don't have that much, are less in energy density relative to the US and Europe, they typically go for cheaper batteries in order to lower the price of their cars. And of course, with lower energy requirements, they don't really need to travel so far. So the batteries are developed unique to the domestic market. I think that's what I want to say. And this does give China a lot of flexibility in terms of developing the kind of batteries that they want to have for their own market. It does give them some sort of leadership there. And of course, very importantly, in terms of public charging infrastructure, China definitely leads the world in terms of the absolute number of chargers. Here you see about 1 million public chargers, which means about just under 10 chargers one charger for every 10 cars. And of course, there are actually 2 million charging points. I mean, the other 1 million are really private charging points. And whatever the mix is, it does beat the numbers that you see in the US and in Europe. And this is really important. Having a charging point is probably the top factor before a consumer will decide whether or not you want to have a car. I mean, you do need to charge it if you want to use it. Moving on to the fourth point, which is really the last point that I want to talk about, is also about future mobility. Investing in this ETF does give you exposure to the grand plan of future mobility. And over here is just an image or a schematic of Hong Kong's Smart City Initiative. I just particularly like this image because it shows you the future evolution of the electric vehicle. This little tiny picture here is the electric vehicle, right, in the grand scheme of things, but the next step for it is to get smarter, for it to talk and interact with its surroundings and drive by itself. Perhaps one day it would be accompanied by a nice little drone, something that you see in fantasy games. I think that reality is not too far away, quite interesting. And of course, it will kind of this future mobility will spread to other modes of transports, more heavy duty vehicles, when the battery can support the kind of energy requirements, going on to trains, and kind of flowing into the aviation industry and fully integrated with your mobile devices and personal devices. The grand plan of future mobility is truly grand, and there is a lot of runway and room to grow. I'll end off my 15-minute presentation by talking a little bit about the underlying index. Now, this is not a boring stuff. The index is at the heart of the ETF. When you buy an ETF, you're really investing into the index, because the whole objective of the ETF is to replicate the total returns or the returns of the underlying index. So this is the heart of the investment. And I just want to touch a little bit on how we pick the top 50 companies that you'll be investing in by having a very disciplined, and rigorous selection methodology. And we are working with MSCI, which is a very reputable global index provider on this ETF. And you can see here the triangle, the filtering process. We start with about 3.5 thousand stocks in the China equity universe. And MSCI applies a really interesting step here, which is using algorithms and NLP, which is natural language processing, to essentially go through large amounts of publicly available data, be it transcripts, annual reports, media reports, etc., that are produced by the companies, in order to identify companies that are exposed to all the various themes and concepts and value chains that we showed you early on in the presentation. Then there is a lot of work that goes into determining relevance. I mean, after all, big data is all about relevance. You pick up companies that are relevant, and a lot of work goes into here. And those that meet a certain criteria, which has a relevance score of 0.25, ultimately gets fed into a final universe of the 50 strongest companies in the China EVFM sector. A little bit on historical returns, definitely not, doesn't show you where future returns will be, but it gives you a flavor of the expectations that you should have, or you can have at least, This is a very high growth sector, like Olivia rightly pointed out at the start of the webinar. You can look at the 3-year annualized returns is 70%, 2 years is 124, 1 year is 84. Now, don't be too carried away by the high returns because it's high growth and high growth sector. Also be very careful of the volatility. Very volatile sector. Annualized volatility runs anywhere from about 30 to 40%. So do take note of this when you are making your investments. So with this, I'm done with my 15-minute presentation. I hope it was helpful for everyone. Kind of sets the setting for you for the panel discussion ahead. And I'll pass everything back to Olivia. Thank you.
Thank you so much, Kelvin, for that presentation. Now, personally, I am very interested in the EV competition growth in Singapore. You know, you've got the US market, the Europeans, and now you've got the Chinese market. And I'm still learning about the space. And I think for our audience, you gave quite a good summary and analysis on like the key factors to look out for. Also, the smart city plans in 2040, great stuff. So again, for our fellow audience out there, if you'd like to watch more on this ETF, head on to NikkoAM's YouTube channel for more videos. And now again, if you have any questions, remember to type in the Zoom chat or in-app our moomoo trading app, and we'll answer your questions at the end of this session. Now, back to Kelvin. Let's start with the core question. What are the current primary factors and drivers for the Chinese EV sector?
Sure. So I think, you know, as I mentioned, kind of touched on in my earlier presentation, I think the drivers in the China EVFM sector is fourfold. I mean, I would just repeat them again very quickly. The first one is really the policy support. I think like any emerging technology sector, government support is very important. And I think China has demonstrated that in many sectors. They've demonstrated that in the banks 20 years ago, not technology, but close. They've demonstrated that in the communications, semiconductors industries. They've also done that for the internet companies. I think that's one of the sectors that we are most familiar with. And right now, if you ask me from a technology perspective, which is one of the most promising technology sectors to go for, it will be electric vehicles and future mobility. So that's really something to watch at. I mean, I can't really think of any other technology sectors out there or investments that is as real, that is gaining traction, and as heavily sought after by major countries globally. You know, other than China, other than the EVFM.
Right. And I know during your presentation, you also mentioned the battery element in terms of units of production being a huge one as well. Maybe you can just expand a little bit on that.
Sure. So the battery industry by itself is very, very large. I mean, in the space of the China EVFM sector, I mean, it goes into just, you know, the cars. It's probably one of the most important component of the electric vehicle. You know, I think it was Elon Musk or somebody similar who said that, you know, an EV is really just you know, a car with batteries, running on batteries. So I think that kind of states the importance of a battery. But the most interesting thing about EV batteries is that it is technologically very interesting, because there is so much you can do, so much chemistry that you can explore, so much innovation that is happening in the battery space that is just extremely promising. And right now, batteries are still fairly limited in a certain way. I mean, in China, a single charge maybe can only let you run 250 kilometers, you know, and a top speed of, let's say, 100 kilometers per hour. But, you know, as advancements improve, you know, then potentially that can help the cars to travel further, you know, carry heavier loads, etc. And I'll just add also that a lot of the developments that are happening in the battery space within the EV market can actually be applied to the broader energy sector. So you must have kind of read about some news in the reports whatsoever that batteries can actually be applied not just in the cars, it can be applied in houses. Solar energy driven houses needs to store the excess solar energy that they have. Batteries can be used in power plants to regulate loads, and quite effectively. It can also be used along the grid, transmission grid, in order to store energy in in locations that are not accessible by the grid, right? And it has got a lot of potential to be used in many different applications, and that's really the interesting thing about batteries.
So as a new investor in this space, I'm like, wow, there's so many components. How exactly should I get started in this sort of like, where should I look at? Because I think there is this idea, and in terms of conversations online, people are going, why Chinese EVFM market and not global, especially with like the key players like Tesla and Audi as well. So, you've got these key players already out there. And so as a new investor, why this Chinese space?
Sure. So when we developed the product, we talk about this a lot, and we were thinking, China or global. There are many good companies out there, but we think that China has got all the ingredients to make it a success, right? China might not dominate the global EV market. It probably has to start promoting it and growing its own domestic economy before internationalizing and exporting its products. But we think that China has the policies, it has the size, it has the right consumers who will buy, and it also has the manufacturing capabilities to support the whole industry properly. And that's really important. What China is trying to do is not trying to grow an EV company. It's not trying to grow a single Tesla. China is trying to grow its entire industry. And that's why Tesla is in China and doing a lot in China.
Absolutely.
Setting up big factories, and helping and being a buyer for Chinese products and components. And I think this kind of frames what this EVFM is all about. It's not just about China, it's about China EVFM is the entire industry. And one day, should China succeed in kind of gaining some leadership in this space, it will start exporting. And hopefully then you can start to see, this becoming more of a global play even.
And so you're saying that the time is now, because of course it needs time to produce the results. And I understand that even a McKinsey report recently showed that by 2035, they plan to be the leaders in the region at least. And so it's amazing all the points you said, but in terms of from an investment perspective, it's not too late, is it, to enter the EV market?
Well, I would say that it's not too late now, and I will put this late into perspective. I will use an example. Looking at the history of a very recent technology wave, which is internet. Remember 10 or 20 years ago, it was called .com, right? And today it started with Web 1.0, 2.0, 3.0. Now think about this. What was the exact time frame of the internet industry, starting from Internet Explorer and everything, Netscape, if I'm not wrong? That was easily 20 years or more, right? And if you look at the China EVFM market, it's very young. Since 2009, when they first announced their national EV policy, it has only been about 10 years. It's only been about a decade. So we are kind of a little bit in the middle. There are definitely investors who jumped in early. I've got friends who already bought Tesla and they're bragging into me. It's like, oh, I got that great car company and I want to buy, as I made so much about it. But I said, hey, that's just one car company, right? What you're banking on the ETF is probably the whole industry in China, at least. And so kind of from that perspective, there is a lot of long-term opportunity and long-term growth opportunities there for investors in the China EVFM space. I wouldn't say that you are the first, but definitely not the last as well. So you're kind of somewhere in the middle. You get to enjoy the growth there.
So how does one utilize then their portfolio with the Chinese EV market? Once I want to get in and I want to start, how do I best utilize that?
Sure. I think that question is better answered from an ETF perspective. And I would also just add first that I ended my presentation by highlighting a bit of risk. I think it's important, although it's not always the best pitch. The China EVFM is high growth, but it's also high volatility. And as such, this can be played both ways. you can always control your sizing. Don't put too much into one, because then you lose 50% of your money within 3 months. It's possible, not impossible, right? But I think really the approach here is to kind of take a portfolio approach to things. And ETFs are actually very, very effective in helping you to achieve that. What do I mean? Meaning that it's more of like, if you have heard about this concept, it's more of like a core and satellite kind of strategy. Definitely, China EVFM can't be your core strategy unless your risk appetite is extremely high. But it can be a satellite strategy for you, which means you can take tactical bets, you can have a small position, but hold it for a long term. So these are all different ways in which you can gain exposure, at least cleverly, into the China EVFM sector. And if you really like the sector and your confidence grows over time, definitely you should add, and then add on to the position and kind of ride on the market beta, is so-called.
Okay. Well, since you talked about valuations, volatility, okay, in terms of valuations, right, how worried should an investor be about the Chinese credit space, for example, or it being too expensive?
Sure. So Olivia, I think what you're really referring to is the credit profile of the China EVFM sector, right? So because this is a sector, so when we talk about credit, we have to be a bit specific. We are talking about the credit health of this sector. So interestingly, the sector is in pretty good health. I just did a check before coming on to the webinar. And from an index perspective, looking at the index, actually all the companies in aggregate that's represented by the index, which the ETF will track, is in net cash. Net cash just means that they've got more cash than debt, and that's a good sign. And they are also quite well capitalized, in the sense that if you look at the gross gearing ratio, which is the amount of debt that all these companies have on their balance sheet divided by their equity, that's only running at about 40%. And 40% gearing, gross gearing, is almost like the gearing of a REIT. I mean, so I find it quite amazing. I mean, but it is, the numbers kind of show that, but it just means that they're well capitalized. And the sector as a whole seems to be in a pretty good shape. And of course, the sector must continue to grow. The consumers must buy EVs, and the investments must make good returns. Then you will have a positive investment thesis. I would just add that perhaps one of the reasons why you're asking the question is because there has been a lot of negative news coming out from the China credit market overall credit market. I think maybe last year or the year before, there was China Huarong, right, which is a distressed debt asset manager who went bust, or rather close to default, I believe. And more recently, you have some stress in the housing market. I think everybody must have heard about that or read about that, which is the China Evergrande, the real estate developer. I think this has created a lot of fears, but it's quite unwarranted, I feel, because as it is right now, they are all quite contained to specific sectors. And we are not seeing any kind of contagion risk that's spreading onto the China EVFM market. I think it's still growing quite well there. As long as consumers' wallets are protected, their jobs are protected in China, which is what the policymakers are also focused on, I think this industry will still grow and attract capital from international markets. And I would just add one last thing, is that at a more macro level, from a credit perspective, or if you kind of look at the sovereign bond market in China, which is essentially the government bond market, that has grown very well over the past 1 or 2 years, despite everything that's happened. And that really shows you that China's overall economy is still, in a somewhat is still holding up quite well, and that should give you comfort. Because it always does provide, the sovereign debt market always does provide support for sector debt markets like the China EVFM space. So overall, not too worried about credit, at least for this sector.
Thank you so much, Calvin. Is there any last point that you'd like to add before we move on to the live demo training?
Yeah, sure. I mean, just encourage everyone to understand a little bit more find out a little bit more and understand a little bit more about the China EVFM space. To be very honest, even when we were designing the products, given that I'm Singaporean, I sit here in Singapore, and China is in Asia, but still quite far away. It is a very unique market, and we might not always be as familiar as we think we are. We take a closer look, we try to understand it. Sometimes we do get surprised by the kind of opportunities and the kind of growth and the dynamics in the local market. So for Singapore investors who are always starved on growth opportunities and technology investments, I think it's something worth taking a closer look to understand.
Absolutely. So we'll leave all the questions for the end, okay? And we'll get back to you with that. Now, thank you, Kelvin, again, for your expert insight today on making better decisions with the Chinese EVFM and ETF space. We've heard the expert analysis, but how exactly do we start? We're about to do a live demo training for you with the moomoo app. And that leads me to our last speaker today, Josh Zhuang, who is the head of institutional sales at Futu Singapore. Now, he believes that he wants to help with advanced fintech solutions to aid investors build long-term sustainable portfolios and seek alpha in an uncertain world. Hi, Josh.
Hi, Olivia.
So Josh, as a
Yes.
subject matter expert, he will show you all the resources and tools on Moomoo to navigate this EV space and how to subscribe to this ETF. Now, if you have your phone or your desktop, remember, open the Moomoo app and we'll start with the demo training. The floor is yours, Josh.
Sure, thanks, Olivia. Apparently, if you're using moomoo, right, so we just make everything so easy and so simple. So does this IOP subscription. So I think in the past, if you do have a brokerage account, you just need to make a call, tell them how much you want to subscribe. But here is we do it in different way. So as you can see, this is the app we are having here. Then for subscription, it's pretty simple. You can just go to the trade page, and then you can find this IPO subscription, this button here. Actually, for this IPO, you can just access to US, Hong Kong, and Singapore. Of course, so today we are talking about the NikkoAM EVFM ETF. So you can see all the details are here. We have 7 days here, so which means this IOP period will last all the way until next week, 13 January, until noon. So if you want to find more details, you can just go to here. Then you can see all the different the details, the basic information of this ETF. So in order to subscribe, the minimum amount need to be 1,000 SGD. The issue price is here, 1 SGD per share, and the offering share is about 100 mil. If you want to say others comments, you find, okay, this is something new to me. What is the topic? I mean, how the others talk about this ETF. Then you can always find more information under the comments and of course the news. Subscription is pretty simple. You just press this button. This will bring you to the page, and you can request from here. And of course, before you do so, you can always see the prospectus. So which means that NikkoAM, you can see more details about this NikkoAM ETF. Of course, this is more for to have a better understanding about this ETF, how the things works here. Just if you find everything is fine, you can just request from here. What you need to do is just enter the quantity of this, and you can see more. Then you can just proceed further from here. So in order to help ETF to make more people to subscribe this, we also run the ETF promotional campaign here. You can always get a chance to win an EV car, and we do have this page from here, the SG page. Yeah, then you do have in order to entitle for the EV, the BYD E6, the car, in order to entitle stand a chance to win the car, you need to subscribe at least 3,000 SGD. And as mentioned by Olivia, next week we are going to do a lucky draw and to see whether you are the chosen one. Yes, so it's just a simple demonstration for how to subscribe this ETF using the moomoo app here. Back to you, Olivia.
Thank you so much, Josh, for showing us on how to subscribe. Now we will proceed to the most exciting bit of the webinar, and it's also my favorite part. where you'll have the opportunity to have your questions answered by our two speakers today, Kelvin and Josh. Now, again, if you'd like to have a question asked, type in the Zoom chat or the Moomoo app and we'll get going. So I'd like to invite our guests back into the room. And we'll start with our first question. So the first question is directed to Kelvin. China has announced last week that by the end of 2022, EV subsidies will be completely removed. Do you see this slowing down the EV sales and the revenue of the underlying stocks?
Well, this is a question that we get from clients quite often. I'm surprised the amount of focus on subsidies. And really, the answer here is not really. The reason is very simple. The amount of subsidies that's being provided to the China to EVs today in China is actually very small. It has been coming down over the past few years. And to give you a sense, at the top end, for EVs that are selling at maybe 300,000 renminbi, the amount of subsidies is not more than 5%. I think probably maxing out at about 10% at this point. It's not a lot. And for cars that are at the low end of the market, like priced very, very cheap, there are no subsidies at all actually in certain models. But that said, the sales of the cars still continue to be quite strong. So it's not very much a concern for us at this point. And I just want to kind of add that at a broader level, for those of you who actually study the history of EV car market development in China, Chinese policymakers have learned their lesson from the 2014 to 2016 period. And back then was when they wanted to aggressively grow the market. And what happened then was it resulted in massive corruption and fraud. That was a very shameful for the industry as a whole. Then since 2016, the Chinese government have actually tightened their grip on the industry, and they've implemented more measures, tighter regulatory oversight, and really the health of the overall industry has improved. So I don't think subsidies is that much of an issue going forward. In fact, it's more healthy. You really shouldn't be subsidizing too much.
That's right. I agree with you. I agree with you, Kelvin. I think for the industry, in order to improve, it's more from the market itself instead of the government subsidy. Of course, the government can always set the policy, set the direction, but in the end of the day, all the players still need to find a way to survive. But it's without the subsidy.
Yes, exactly. And if think about this, right, for end investors, if you are investing into an investment or a upcoming technology sector, and your requirement is that subsidies have to continue, there's something incorrect in your thinking, that you will want to buy into an industry on life support, and that's really not the way to think about it.
That's right. And government shouldn't spoon feed all the companies, so you need to find a way. Yeah.
Yes, correct, exactly.
And the next question is really about, the players like Tesla, right? So in terms of the portfolio, and also adding on to what you ended off with, how can I best diversify my portfolio, both in app and also through this ETF?
Sorry, when you say in app?
So for example, I guess with Josh, maybe you like to answer this question?
Yeah, sure thing. I think before you build your portfolio, apparently you need to know the horizon you want to invest. So which means you're talking about 3 years, 5 years, and maybe even 10 years. Then of course for the EV now is apparently it's emerging. Then in order to invest in the ETF, you're talking about diversification. You invest in a portfolio. Then of course I think for the EV itself, it will be a good fit for the portfolio itself. But of course, before you invest, before you build a portfolio, you need to ensure that what is the horizon you're talking about.
Sure. I see, I understand. And I think if the question is really asking to compare between Tesla and an ETF, I think the question itself is quite clear. It says that one is a car company and the other one is an entire industry. I think I made it quite clear in my earlier presentation as well that they're totally different. You want to buy a car, go ahead, buy a car company. If you want to buy into the China EVFM industry, then an ETF with all the 50 strongest companies, it will give you exposure to the market beta, right? The drivers are quite different as well. One is more macro and one is more company specific.
And of course, if you do have a chance from the broker's perspective, before you do investments, of course, you need to do your own research, you do your fundamental analysis, all these things. But maybe if you do have time, you can just go ahead, spend some time to know more about one company, one specific company. But if I say for, you're more passive, do some passive investments, ETF will be a very good choice.
Yeah, exactly, Josh. I totally agree with you. I mean, although I'm an industry practitioner, even for myself, I would admit that I don't know very much or that deep about the China market. And sometimes just buying a basket does have its benefits.
That's right. Yeah. And of course, you can see all the names. What's the difference between Neo and the Xpeng, Xiaopeng. So if you cannot find out the answer, yeah, ETF could offer you the shortcuts.
Okay. What is the max cost for this ETF, by the way?
The maximum cost. So for ETF, the way we measure cost is the total expense ratio, 70 basis points per annum. But I'm not sure if you're referring to trading it, in which case probably Josh would be better to answer.
If you're talking about subscription, for subscription, we don't have any commission, but of course, because it's a SGX listed instruments, the CDP will charge 10.7. That's all the cost. 10.7 is all the cost. Yeah.
Thank you for that. Yeah. So, Calvin, you mentioned, about Web 2.0 and like that entire industry paradigm shift, yeah, and kind of that evolution and growth. And one of our audience members would like to know, do you think that the EV is like the .com stocks in 2000?
Definitely no, right? I think it's just totally wrong to kind of compare that. I think where we are coming, where the investor is coming from is whether or not the prices are too rich, right? And we look quite closely, at least within our investment teams, on valuations and everything. So we do look closer at the specific companies. And right now, I think at the sector level, the index that ETF tracks is trading at about a 1-year forward PE of about 58 times. So it's about 16 times PE. I mean, if you compare that to a Tesla, it's probably 100 times PE or more, right? So the whole sector is trading at fairly lower levels, right? But that said, it is pricing in a growth of about anywhere from 40% to 70% for the next 2 years. So with that kind of growth, the PE will come down and closer to its average. So and that's really looking at a 2-year horizon, but like I mentioned earlier on, when you buy into a thematic ETF, and that's really what this ETF is all about, it's a thematic ETF, you really need to have a slightly longer term investment horizon. We're trying to capture the long-term opportunities in this. So the near-term PEs are high because growth is high, but we won't be overly worried about it. That said, there will be volatility and investors need to be aware. I think that that's the same for all investments.
Yeah, I agree. I think for this industry, it's still emerging now, and of course the PE will be a very good indicators. So if you're talking about it's overpriced or underpriced, you can say it's still driven by the whole industry. So I mean the main difference between EV and traditional car which is the software itself on top of the hardware. So maybe people may say the software may change the whole, the human behavior. So now when you drive, you can just, they do have other concepts, let's say self-driving, all these things, then you can spend more time. So these actually the EV concept linked to other concepts. And so these become the whole ecosystem.
Yeah, and Josh made a really good point, right? By talking about the IT or, the technology component of the EVFM sector. Based on what we see today, the shape and form of the China EVFM sector is very manufacturing driven. So about 60 to 70% of the index by market capitalization is just car manufacturing, as well as electronics manufacturing and some mining. of raw materials. Advanced sectors like battery manufacturing, battery components, materials, semiconductors, and even IT, information technology related companies in terms of market capitalization is still very small. If the China EVFM market grows and develops over time, the software component of things will start to grow, and that has got much bigger opportunities, from a market value perspective, and you can kind of see, when you think forward, you can expect that to grow and drive the entire growth in the industry over the next few years.
Yeah, apparently EV will become the very critical parts of the whole so-called system, that, or maybe you can say it's an economic system, or they will change the human behavior.
Yeah, and on that point, it probably has the highest chance of happening so in China. I mean, we got clients. I mean, interesting point here. We've got clients who ask us, it's like, where do you think autonomous vehicles will take off, in which region? And given that China is Chinese consumers are still fairly adaptable to new technologies relative to a lot of old economies. There are surveys and studies done that estimates that China will be the dominant market for autonomous vehicles, which is really just the immediate next door progress or development for EVs. I mean, they just got to go from where they are today to become smarter, and China has got a good potential to capture that opportunity. That's also something quite exciting.
Yeah, we can see the potential over there because of the population there. So maybe in US, in Europe, we are talking about car. Tesla is a car. But maybe in China, you're talking about BYD or Geely. What they do, actually, they are trying to build a bus or build a truck. So this will bring the whole EV to a new level.
Absolutely. And I have to agree with that. I mean, I think it's really interesting that, just to localize it a bit, this seems to be the space in Singapore where, there are a lot of investors coming in, a lot of companies coming in, and even like with that whole 2040 plan and smart city plan, you've got even Hyundai setting up their first manufacturing plant, yeah? And, Tesla, and now the Chinese EVFM market. I would like to personally know, for the audience, what is the Chinese position with that in terms of, the Chinese market and Singapore market?
Sure. I mean, I think that's very easy to answer from a Singaporean perspective. We are a small country. We want to be part of the supply chain. We would import Chinese manufactured EVs, and we do have a few Chinese brands here already in Singapore. You got BYD, you got Polestar, you got quite a few, and they're all here. You have Tesla here too, and we are trying to grow the market. And we want to be part of that supply chain. We trying. This has always been Singapore's position. Looking beyond our shores in ASEAN, I think I've recently read some news that countries like Indonesia or Philippines, which has got good nickel resources, also wants to open up new mines, such that they can be part of the supply chain supplying nickel metal into China for manufacturing of the batteries. So it will be inclusive, which is consistent with the policy and grand direction of Xi Jinping, I would say.
Okay, Josh, would you like to add anything for that?
Yeah, I think because we are in the Asian, so-called Asian or the Eastern. So apparently, if Singapore is going to do something about the EV, and China will be a very important critical supplier to Singapore, and so Singapore will become the hub, and you can expand to the whole Southeast Asian countries, because we are talking about the population here, we are talking about the potential here. So at the end of the day, Singapore, China, they can find some synergy, and in terms of the EV industry.
Well, Singapore have the infrastructure to manage that and to be able to reach that plan by 2040.
Oh, of course. Singapore has always had world-class infrastructure. If it comes to infrastructure building, I think we definitely can do it if we want to. Yeah.
In terms of like the charging points and having everyone sort of convert to this new way of living, this sustainable EV style.
I think, yeah, Josh wanted to say something. I'll let you go first.
I mean, of course, if you say the next month we're going to be the budget 2022, so I think the government will definitely mention something about the EV, what they're going to do in terms of infrastructures, might be the tax subsidy or maybe some other things. So we can see across, as you mentioned, that we have a 2030, 2040 plans. Yeah, we just take one step ahead.
And if I'm not wrong, based on what I read, there is already an announcement that we will phase out traditional cars and replace them with EV or hybrids within the next 10 to 20 years. So for those who are not following the news, it's going to hit you really hard, very soon that you got to change your car, into something else, and that's going to completely overhaul the entire, infrastructure in Singapore. I mean, I was just thinking, it's like, what's going to happen to all the petrol stations? That's kind of one of the things that I always think about. But yeah.
Important, yeah, because that takes up a lot of space as well. So that might be transferred or changed and converted into charging spaces.
I don't know. I feel that in Singapore, there's just, given how small the country is, there is definitely potential for it to be more decentralized. I know condo committees don't really like the idea because it's really a big hassle for them and they don't really know how to go about doing it. But having it decentralized is quite an interesting thing. I mean, as a personal thought, I mean, I had a friend talking to me about it just a few months back, saying that his condominium committee is thinking of implementing charging points, but they don't know who to pay for it. Then I just threw out the idea that why don't you pay for it? It's like you own one charging point within the condominium, so you own that charging point, you invest in it, and then whatever that you make, the profits that come out of it goes to you. So it becomes a decentralized model, ownership model, which may work. I don't know, but it's interesting to think about it.
Thank you for that. For our last question, and I'm going to use this question to wrap up, but from the audience, yeah, we understand that you are the first listed ETF that captures the Chinese EV market in SGX, the Singapore Stock Exchange. So, if I am a new investor wanting to enter this space for SGX, is there sort of like a trade-off between investment earnings and then also being sustainable in this space?
Well, apologize, Olivia. I'm not entirely clear of the question in terms of what do you mean by the trade-off between sustain. Oh, I see.
Right. So if it's one or the other, or are you able to balance it out or have the best of both worlds?
I understand. Now, personal view here, and I'll be very upfront. I don't think electric cars are green. I'm not fully convinced. But I think electric cars will change the industry and to a certain extent part of the world. And that's really what is strikes me the most. I mean, there are many arguments out there. Electric cars can be green when you look at it on a total life cycle basis, etc., etc. I mean, I honestly am not expert in this. I can't get my head around it, but I can see the value creation in the EV in the whole EVFM industry. So that's what I like about it.
Josh, would you like to add anything?
Yeah, I agree. I think it's more about the value itself. So I think for the EV, it's not only about the car manufacturer itself, but also you do have the whole industry to support you. Then if the EV sector emerging in certain countries, or maybe for the new generation, they are more accepted to this EV concept, then yeah, the value will increase. Then here, I mean, at this moment, we are talking about the value of this industry.
Yeah. Thank you so much. That's all we have for time in terms of questions. Now, gentlemen, would you like to have any last words before we end our webinar today?
Josh, I'll let you go first.
Oh, okay, sure. I think definitely something I'm going to mention is that we are running this BYD car giveaway. So if you still have a chance to win, so by end of 13th of January, if you subscribe more than 3,000, you do have a chance to win. Of course, we do have other tasks you can complete, refer friends or share this campaign with others. You do have a higher chance to win. So yeah.
Sure, and I will just add that I too am very tempted at the BYD E6. It's a very, very interesting looking car. I mean, I've got rubbing my hands, but on the investment side of things, I think I've mentioned this before. I think when it comes to China EVFM, a lot of the clients that we talk to, the truth is that they don't understand the China electric vehicle market very well. And I think it warrants to try to understand a little bit more. And perhaps that will help you to appreciate the sector better, where it's heading and the opportunities there before you make the investments. And thank you very much for having me on Moomoo's webinar. I think this is exactly what we need, to help to give investors a little bit more education and information directly from the horse's mouth. The ETF issuer here, in this case, it's Nikko, and hopefully it helps you in your investment journey.
Thank you so much, Kelvin from NikkoAM, and Josh from Futu Singapore for joining us today, for offering your insights on China's EVFM and the EV market globally. I really enjoyed our discussion. Thank you.
Thank you very much.
Thank you so much.
As for the audience, it was a pleasure being with you, and we look forward to the next webinar. More details will be in our Moomoo app. Again, if you want to join the EV car giveaway on the 17th of Jan, 3 p.m., remember to head into our app after this to be eligible for the lucky draw. But by being the first one to subscribe to the ETFs, our big winner will win this amazing car, but also we are giving away NIO shares and $1,000 stock coupons. So be sure to check it out, and we will announce the winners at 3 p.m. on 17th of Jan 2022. We hope to see you there. You can also follow our Instagram, our Facebook, and all the other socials if you like to keep updated on more webinars like this, to educate yourself on making better, smarter investment decisions. Our team has also put any details in the Zoom chat. So if you want any additional questions, you can always email webinar@futusg.com. It's webinar@futusg.com. Thank you so much, everyone, for joining us today. Once again, I'm Olivia Higgins. Have a wonderful day and see you soon.
Thank you.
Thank you.